All right. Hello. Welcome, everyone. Welcome to our fourth annual Financial Literacy and First Time Home Buyer Seminar. We have joining us Ms. Tanisha Talley of Operation Hope. She is a financial coach. She also provides a lot of services when you're trying to get your credit together. We also have Ms. Lisa Booker with us, who has been an expert in the mortgage industry. So you're going to get a lot of great information from her expertise as well. I'll finish it off, of course, talking about the home buying process and what that looks like after you've got your credit together, after you've been possibly pre-approved for a mortgage. Then you need to get a realtor and go home shopping. So, with that said, Miss Tanisha Talley, I'll let you take it over.
Thank you. Thank you so much for that introduction. Okay, so can you all see my screen? It should say Credit and Money Management Program.
Yes, we can.
Yes.
Okay, so we will get started. Thank you.
You're welcome.
Um, so welcome to the Credit and Money Management Workshop. This is a transformative experience that's designed to empower you on your journey to financial well-being. My name is Tanisha Talley. I am a Hope Inside financial well-being coach with Operation Hope, located inside of Citizens Bank over on Jefferson Street. This is our community agreement. Just tells you how we're going to move through this portion of the workshop. So we actively listen and we communicate respectfully. This is a confidential and safe space, so whatever you say will stay here. Also, we welcome constructive feedback. We embrace diversity and inclusion because not everyone comes from the same walk of life. Okay, so some people have different perspectives. Let's be respectful of those. And also, we are fully present and actively participating. I'm a little shy, so don't leave me hanging and not say anything to me. And if you do, I will kind of call on you, so keep in mind. But we'll start with what is Operation Hope and how we got started. So Operation Hope started 30 years ago in Los Angeles, California. We were well, actually, about 33 years ago. We started after the Rodney King riots. Our founder is from Los Angeles, and he wanted to ensure that the community did not have any more uprisings. I think there was about $2 billion worth of damage from the rioting. So our founder got a bunch of bankers, put them on a bus, rode around and said, hey, look at all of these opportunities for you all to come in and rebuild. However, they didn't want to come in, rebuild, and risk the rioting, risk the community rioting and tearing down all that they've built again. So Operation Hope was started to teach people about financial literacy and about the stake that they're holding, the stake that they hold in their community by being small business owners, by being homeowners, also just by being financially well. And if you've ever heard our founder, John Hope Bryan, talk, he talks about zip codes. And you're probably like, why zip codes? Well, zip codes are really important because if you go to different areas of Nashville, you will see that some areas they look a lot better. They look a lot more maintained. And those are going to be those people with those 700 and up credit score. So our goal is to come into underserved communities and get the communities to a 700 credit score and above, because people that have a 700 credit score, their life expectancy is a lot longer. Because how many of us have been financially strained and we just feel stressed and weighed down? And that weighs on you health wise. So our goal is to get everyone on a level playing field, and let them know how their dollar can actually make a big bang in this economy when they're financially well. So since we've started, we've become the largest financial empowerment nonprofit in the U.S. We've opened up over 150 Hope Inside locations. We've directed more than $3 billion back into disenfranchised communities, and we've empowered over 1 million youth. We're really great at what we do, and we're on an upward trajectory to continue in that with that momentum. So this is our community uplift model. It just shows the services that we offer and who they're geared toward. Hope Inside Adult, which teaches credit and money management, home buyer preparedness, and small business development. I am also a homeownership coach. So if you're ready to go through that process and you need someone that's unbiased that can assist you, I can definitely do that free of charge through our program. We also have programs for the youth. We have Hope Inside the Workplace, which is where you have a coach like myself in the office for the employees. Example would be Delta Airlines. We also have Hope Inside Disaster, which is where we partner with FEMA, American Red Cross, to name a few, and we help people recover after financial disasters. So think tornadoes, hurricanes, fires. Los Angeles wildfires was a big one that we were just helping with. Going out, getting people to fill out their insurance claims, making sure that they are able to get back on track financially after disasters of that sort. And again, all of these services are free. If you ever know anyone that can utilize them, please refer them to operationhope.org. And if anyone has any questions, if someone can let me know, because I can't see from this screen, unfortunately, but feel free to stop me. Also, we want you to know about VITA. The IRS is another one of our partners, and they actually will file your taxes free of charge if you reach out to them and you make under a certain amount, $58,000 or less. If you're a person with a disability or a limited English speaking taxpayer, you can have someone file your taxes free of charge. There's also tax counseling for the elderly, which is for people that are 60 years of age and older, and they specialize in questions that are unique to seniors. So pensions, retirement related issues. Okay. And again, free service. You can go to irs.gov, just put in VITA, and it'll pop up in the search bar. Okay. We also want you to know about earned income tax credit. Earned income tax credit is where if you make under a certain amount, you would actually qualify for a credit that can lead to a refund. And I think last year, and I hope I'm not wrong, I think it was $57,414. If you made under that amount, then you qualify for a credit, which could lead to a refund. Now, sometimes people will fill out those short tax forms and they don't have this option on there. So we have quite a few people that miss it. 1 in 4. So we like to make people aware. One of our clients, she actually went back through VITA, got the last 3 years resubmitted, and she actually ended up with a $12,000 refund. So $12,000 can go a long way, especially now in our economy and the things that we're facing. So if you made under that amount and you did not take advantage of this, please go back to VITA. Let them know. They can review and resubmit if necessary. Okay, so did anybody have any questions, concerns about that before we move into the credit and money management program? Okay. So our credit and money management program is designed to transform your financial mindset. We teach you the language of money and how to navigate your finances to put you in a better place and help, again, level that financial playing field. Because some of us have been left out of all things related to money, and we're kind of just winging it. We're robbing Peter to pay Paul, and we're just out here not making much headway when we could if we make some small changes to making sure that we're saving, making sure that we have good interest rates on the savings accounts that we have. And that's what we teach you at Operation Hope. Okay. So money mindset, which is the biggest factor in how you manage your money. Money mindset is your unique and individual set of core beliefs about money and how money works in the world. It is your attitude about money. So are you a person that as soon as you get your money, it burns your hands? You're off spending, you're shopping, you're buying some from Amazon, or are you a person that holds on to everything because you know what it's like to not have? Do you have a scarcity mindset? Are you a person that thinks I can always flip my money into something more? Do you have a growth mindset, abundance? Do you think that this can always lead to better things? Or are you a person that feels like, this is what I got, this is what I'm going to have, there's not much room for growth, and you're kind of stagnant? Thinking about the way that you think about money is going to be a huge factor in how you move about. And if you're not where you want to be mindset wise, again, that's what Operation Hope is here for. You can always change the way that you think about things and, move forward in a better direction. You don't have to stay where you are. You can always go up. And that's our goal, to meet you one-on-one where you are and get you to another level. Whatever your goal may be, we help you achieve that. So mindset is everything. Your beliefs become your thoughts become your words become your actions become your habits become your values, and your values become your destiny. Again, and our founder has a lot of good quotes, but he always says, if you think you can do it, you can do it. If you think you can't do it, you can't do it. The only thing that's stopping you from achieving your goals is you. We will give you a personalized game plan to get you where you want to be financially, but you have to remove yourself from your way. Step out of your own way. do the plan, and you can definitely achieve your goals. Whether it's just having a larger savings account, whether it's purchasing a home, a new car, saving for your kids' tuition, whatever it may be, we can assist you with that, but you have to step out of your own way. So I'm going to take some time to ask a question. If I can get 3 or 4 answers, if you unexpectedly received $1 million today, what would you spend it on? Would you save it? Would you give it away? Would you do a combination? What exactly would your initial thought process be once you receive that money? And again, I can't see hands, so if someone can just filter those questions, that would be great.
So anyone at either site, at Anastasia's site or Christian's site, can you get someone?
Uh, None of the students want to comment on that, but I make a comment personally on it. If I got $1 million, the very first thing I would do is open up a high interest savings account and put about half of it in there and use the other half to get stuff that I need.
I love that. I absolutely love that.
What about your site, Anastasia? Anybody wants to make a comment on if they unexpectedly received $1 million today, would they spend it, save it, or would they give it away? I
Um,
would, let me go ahead and answer that too. I think if I received $1 million, knowing the amount of bills that I got, I would save it.
It makes sense. It makes sense, especially with our economy today. It's a lot of uncertainties that's going on right now. And a lot of times people are like, should I put all of this away? What exactly should I do? But I think it's a great idea to definitely save. You always want to save at least 20% of what's coming in. If it's 1 million, you should definitely increase that amount. But you definitely always want to put money to the side for savings because life is always going to life. And if anyone is over the age of 10, you will know. Life is always going to life. And the only reason I'm saying 10 is because you may not remember what life did to you a little earlier than that. But there's always going to be something that comes around that requires some money, requires some time. And if we got to provide time, then it means we got to step away from the money to do it. So just always having something put to the side is going to be the difference between being financially successful and unsuccessful. Okay. So we'll start with, what is a credit report? Credit report, in simple terms, I like to call it your adult transcript. It's pretty much a summary of your financial history. It's going to have details like your credit accounts, payment history, public records, and credit inquiries. So think about if you have a profile, and anyone that wants to lend you money, let's just say, if Patrice came to me and said, hey, I want to borrow $500,000 from you. If I put in her information, I pull it up and I can see Patrice has been making her payments on time. She's not asking people for a lot of money, which is credit inquiry. So anytime that someone reviews your credit report in hopes of lending you money, that is considered a credit inquiry. Now there's two different types. You can have a hard pull or you can have a soft pull. The hard pulls are what's going to show as credit inquiries. And those are when someone is looking to lend you money. A soft pull is when you're looking, it's just informational purposes. So let's say if you're applying for an apartment and they say, hey, we got to pull your credit, see exactly what it looks like. They're not lending you money, so it's not going to be a hard inquiry, but they are looking for informational purposes. So that's a soft pull. So anytime someone is pulling your credit, you want to make sure, hey, is this a hard pull? Because hard pulls will affect you point wise. Your score can drop 5 points. So it may be 4, 3, 2, or 1, but max 5 points. So keep that in mind. Anytime someone says, hey, I want to pull your credit, well, what exactly are you pulling my credit for? And just go over all of that information, because you don't want people just looking at your credit report, because it can drop your score. So you don't want to go out applying for account after account after account. Again, that can drop your score. You also want to make sure that you're always paying on time, because they can see When you look at your credit report, we can see if you're 5 months behind, 4 months, 3 months. We can see if it's been charged off. We can also see if you decided to go wipe your slate clean and file a bankruptcy. So everything that you've done financially is going to show on this report. Now, it's extremely important, especially going into the home buying process, that you're looking at your FICO score. There's different types of credit reports that you can get. One of the two major ones right now are FICO and Vantage Score. If anyone on the call has a Credit Karma account, they're providing you a Vantage Score. Now, Vantage scores aren't bad. It doesn't mean that the information is inaccurate, but the score is normally higher than what it would be with your FICO. So we like to tell people to keep that in mind. You may have a 720 that's showing on Credit Karma, but when we pull TransUnion, Equifax, or Experian, you're showing 715, 705, 710. And you're like, well, what's the difference? It's the scoring model that they use. So keep in mind, whenever you're looking at your credit reports, you want to pay attention to your FICO score. 90% of lenders look at your FICO. But your score can range from 300 to 850. Our goal is to get you.
We have
Yes.
people in the waiting room. If you can check your waiting room, trying to join
Mr.
upstairs.
Tally, yeah, she's the host. You probably have to go ahead and click admit all up at the top. Can you do that, Miss Tally?
I don't think so. Because I'm in this PowerPoint. Do
Okay.
you? Uh-oh.
Hold on. I can reclaim host, let them in, and then give it right back.
Okay,
Give me 1 second.
I
Sorry.
also had a question.
sure.
Is there any instances where your Vantage score would be higher than your FICO score?
Most of the time it is higher. And that's why we tell people to not focus. If you're going to look at it, and just to give a little bit more info about Vantage scores were
My
created
bad.
from the three major credit bureaus, Equifax, Experian, and TransUnion. They went off and created their own scoring model, and they would like to push it. However, people are kind of stuck in their ways and they're sticking with FICO. But Vantage is normally higher than FICO. So don't pay attention to that score if you're looking at your Vantage score, because majority of lenders, 90%, are looking at a FICO. But you can definitely check it to see if it's accurate or not, but they're looking at your FICO.
I apologize. I meant to ask it the other way around.
If your FICO could be higher than your Vantage.
Yes.
I guess it's a possibility. And the reason I say that is because not every lender is going to report to every bureau. So let's say if you have a lender that you're not doing really well with and Vantage score is picking that up, your score could be lower there. And when we look at your FICO scores, let's say if we just pull TransUnion and that company isn't reporting to TransUnion, then your FICO score with TransUnion could be slightly higher than a Vantage score. So it just really depends. And that's a really good point that you brought up. It's extremely important to check all three, especially going into the home buying process, because you don't know exactly which one. Well, with the home buying process, they're going to pull all three major bureaus, Equifax, Experian, and TransUnion. So you want to make sure that you're checking all three, because again, not everyone is going to report to every bureau. So you may have one that's doing really well. For example, I had a client that had what are those things called? A timeshare. He had a timeshare, and the company was only reporting at Equifax, but he was only checking TransUnion. So TransUnion, he had about a 750. When we looked at that Equifax report, he was in the fives because he hadn't been paying it. He was trying to get out of it, but they were only reporting to that bureau. So just keep in mind to keep track of all three, because you never know which company is going to pull from which bureau, and in the home buying process, they're going to pull all three and check the middle one. Well, select the middle one. Any more questions about that?
May I add something, Miss Tally?
Sure.
So, this is Lisa Booker, and what I'd like to share with the participants is echoing what you're saying. I would like to go back first to how easy it is to get an inquiry. So, first of all, I want us to know that anytime that you go out and you're seeking a service and giving them your social security number, guess what? An inquiry pops up on your report. So, say for example, this is Mother's Day weekend, and you're going out shopping because you desire to purchase your mom a beautiful dress, right? So you get to the register, because you've already picked out the dress. What is the very first thing that representative is going to ask you? Does anybody know? How about this? Would you like to apply for a credit card and get 10% off? And you say
Mhm.
yes. And guess what they'll do? They'll say, no problem. We can tell you if you're approved on the spot. May I have your social security number? Ding. Guess what? Because you're seeking service, you're seeking financial assistance from them, right? So now you got one ding on your credit report as an inquiry. Then you decided, mom have been just phenomenally well this year. So what I'd like to do is to purchase her some shoes also. And you were at Macy's for the dress. So now you go down to Dillard's and you see this beautiful pair of shoes that would just accent the dress tremendously, right? So you pick out the shoes, you go up to the register. What's the first thing that the clerk will ask? Would you like to apply for a credit card? Get 10% off. And you're like, sure. Ding. There's two dings on your credit report now as an inquiry. Now you're walking down the mall, right? And you see this Verizon representative in the center of the mall, and they're trying to sell you the new Verizon phone and service. And they're like, come on over and bring your social security number with you. Why? Because they're trying to sell again a financial service to you. So you give it to them. There's three dings. Now let's just talk about this. Now, if you're an avid shopper, and you're doing all of that every month and giving your social security number out that loosely, by the end of the month, if you've shopped every weekend and say there's 4 weekends in a month, there could easily be 12 inquiries listed on your credit report. And so oftentimes people will share, well, what's the big deal about getting too many inquiries? Too many inquiries will make your credit score drop, right? And you should not be giving your social security number out just that loosely. If it's basic things, why not say, hey, you know what? I'd rather pay cash for that dress because all I'm really saving is the taxes, right? So you want to be very, very careful when you're an avid shopper of always going out there and seeking those services. Also, I want to remind you that when you're going alone in the mortgage process, you want to be careful not to be doing any of that during the time that you're shopping for a home. Because guess what the lender is going to do, my friend? The lender is going to take a look at your credit report. They're going to go to that back page where it's showing the inquiries, and they're going to say, wow, this person is shopping every weekend. They have 1,000 inquiries, and inquiries is not going to just drop off your credit report in 30 days, right? So I'm sharing that to say just be extremely careful about going out there and seeking services several times a month where you're giving up your social security number. The second thing I'd like to add, I love how Miss Tally was talking about your score, right? The mortgage lender, they're going to pull what is called a tri-merge credit report, right? So, yes, there are thousands of models out there. They're not concerned with the thousands of models out there. They're only concerned with the mortgage profile, which is their tri-merge credit reporting system, which will only pull from the big three. And Tonisha, Miss Tally gave you the big three. It's Equifax, Experian, and TransUnion. Those are the three that they're going to be pulling from. Again, Equifax, Experian, and TransUnion. And so when they pull that tri-merge credit report, tri meaning three, those are the three bureaus that they're looking at. They want to see what your credit score is with those three reporting agencies. They're not concerned with Credit Karma. They're not concerned with all of those. And by the way, Credit Karma tends to be about 40 points higher than what this model, because they go by the Fair Isaac credit scoring system. I would like for you to do this exercise with me, please. Now, I want you to write the word Experian down. Then I want you to write the word Equifax down. Lastly, I would like for you to write the word TransUnion, or you could just put TU. Now, I'm going to give you a credit score. I'm just going to throw some scores out, and I want you to write them down. Beside Equifax, I want you to put 700. Beside Experian, I want you to put 580. And by TransUnion, I want you to put down 652. And so the very first thing you should say to me is, Miss Booker, why does all three of them have different credit scores when I have all of the same accounts? Miss Tally told you, and I don't know if you kind of caught it, but not all companies report to all credit reporting agencies. And you may ask, why do they not? Because they have to pay to report your information to the credit reporting agencies, right? And so Equifax, let's say Equifax is huge in the Nashville area. There may be some companies that will only pay for your information to be on Equifax, right? They may not pay for other companies that are widely used in the West region or South region, right? So you got to know every company does not report to every agency because they have to pay to put the information on there. Okay, that's the first thing. Secondly, let me say this. Do you realize how credit really got started, right? So credit back at, okay, let me share it like this. My mom was born in 1917, a country girl, right? And so in Fayetteville, Tennessee, when she went to get credit, the people in that area, they would know who she was. Why? Because in your area during that day and time, they did credit by a handshake. Your word was your bond. And if you said you were going to do it, you did it, right? But wonder if my mom moved to California and she was out there and she wanted to borrow money. People in that area wouldn't know who she was, right? And so if they didn't know who she was, they would think, I'm not going to let this woman borrow any money. So a credit system was designed as a voucher system, a system that would vouch for you, vouch for your credit. You know what? Miss Tally is good for it. She pays her bills on time. She pays before they're due. She pays more than they're due. But guess what, folks? It also will tell on you. I'm telling you, she won't pay her bills on time. She still owe us for money we lent her 5 months ago and have not made one payment. So like she said, a credit bureau reports that payment and shows you the payment. Now let's go back to the credit when I was giving you the scores. Now, I said Equifax 700, Experian 580, and TransUnion 652. Now, let me tell you what the lender is actually going to do. And write this down because I want to make sure you keep this in your notes. They're going to toss out your highest score. And our highest score is 700. So put an X on that 700. They're going to toss out your lowest score. And can somebody tell me what is our lowest score?
It was 500 something.
It was 580. That's right. So you're going to X out the 580. The last score left is 652. They're considering that your middle score. That's the score that they're going to use to determine if you can get approved for a home, what your interest rate will be, and what program will accept you. Again, I want to make sure you have that. They're going to eliminate your highest score, they will eliminate your lowest score, and everything will be based off of that middle score. So keep that in mind when you are applying for a home.
I
Thank you
have,
for allowing me to share, Miss Tally.
oh, thank you, Ms. Booker. And I also have a question too. And I know this will probably be more directed to you, Ms. Tally, in the financial planning. You said paying on your bills late or past the 30 days will drop your score tremendously. What if
Mhm.
you're paying on your bills before they're due or paying off the credit cards early? Does that have the same effect as well, or is that always a good thing?
So, and we'll go into that in the next slide. In regards to utilization, that goes into the utilization portion. I wouldn't suggest that you pay down to a zero balance, especially on revolving accounts, because let me just go to the next slide. Let me go to the next slide and we'll go into it. So
Okay.
your credit report has 5 components that make up your score. That 30% portion is your total debt utilization. So these are revolving accounts. And revolving accounts, think about a revolving door. If you pay down a balance, you have additional credit that you can spend. So if we go back to what Ms. Booker said, if you were to get a credit card at Macy's, let's say they approved you with a limit of $1,000. We don't ever want that balance to be higher than 300. And the reason we say that is because people that carry a balance over 30% of what the limit is look irresponsible. We always want you to look responsible. So keep that balance at 300 and below. You can, people with 800 plus credit scores, their utilization is about 8%. So we're telling you to aim for 30, but the better you would be better in that 8% range and a little bit lower. Now, at a zero balance, you're not hurting yourself, but you're not helping yourself either. I've had clients that say, well, I pay off my credit card every month before it's due, but my score isn't moving. Your score isn't moving because you're not utilizing those balances. So, well, I'm sorry, the credit that you have. So think about if let's think about a good example for this. Let's say if your credit isn't, think about, hold on one second. I'm trying to put this in an easy way to understand. So if you have your, let's say 5 credit cards, right? And the only time I tell people to keep them at a zero balance is just because you don't want more than 2 credit cards active. It's a lot easier to get 2 credit cards in control when the limits have gotten high. Let's say if you're close to maxing out 2 cards, it's a lot easier to get those in control than it would be to get 3, 4, 5 credit cards in control. And you want to make sure that you're keeping it at about 8% utilization. Anytime that you're at that zero balance, when it's going to the credit bureaus, they don't know that you've used it. Equifax, Experian, and TransUnion, they don't know that you've been using this card. Yeah, Macy's knows that you're using the card and you're paying that balance down to zero every month before it's due. But once TransUnion, Equifax, and Experian, or whoever they're reporting to gets it, they just see a zero balance. So they're not calculating that utilization into your score. So that's why you'll see people saying, hey, I'm paying every month before it's due, but my score isn't moving. Carry some type of balance. If it's $1, $2, $3, whatever it is, keep some type of balance on there versus just sitting at a zero. Now, again, the only time that that's okay is when you have 10 cards. One of my clients, before she met me, she had 10 credit cards. And that's just ridiculous. Now, imagine if life happened and she started depending on credit cards. It's going to be super difficult to get your life back in control having 10 credit cards versus getting it back in control with just 2. It's a lot easier to pay off $1,000 than 5,000. So just keep that in mind. You always want to show some type of balance so they know that you're actually utilizing a card, and you can see that 30%. That 30% will have a huge impact on your score. I have a lot of clients that come to me with really high revolving debt balances. And once we bring them down, their score shoots up as long as they've been paying on time. So a lot of times people are saying, well, my score is not moving. I'm paying every month. Well, you're only paying the minimum balance. If you're limit is $1,000 and they're telling you your balance is $985 and you got to pay $50 to keep it going, and that's all you're paying, your score is not going to move. You're just going to continue to gain interest and also continue to be in a cycle of push and pull with them forever. So it's better to always pay more, but again, don't set yourself up for the kill and keep it at a zero balance. Another thing with zero balances, credit history is 15% of your score. So I had a client that was looking to pay off everything to purchase a home. I told him don't do it because your score can drop. You'll lose the history. He did it anyway, and he dropped 25 points. So imagine if you were at a 725 and you went and paid everything off, you would expect to go up. He went down to 700. So that was a difference for him when it came to interest rates. So his score actually dropped and he ended up with an interest rate that was worse than what he had before. So think about when you're looking to pay items off, you're going to lose the credit history that went along with it. If you had 20 years, and the biggest factor of his situation was he paid off student loans. For most of us, student loans are the first line, trade line that we ever open. And me personally, I'm not even going to lie to you. I still have student loan debt that's lingering. And with that, I'm still having to push out payments, but the interest is just growing. The amount that I started with was probably a lot less than what I actually owe now, just based on having to pay them back, and it been sitting there for 10, 12 years, and the interest is calculating. So keep in mind, even if you have been making payments on that for 10 years, it's not paid off. You're still making payments on it. It's on-time payment history. But once you pay it off, you lose that history. It'll still be on there, but you lose the history. You no longer have 10 years worth of payment history. And that's why his score dropped 25 points. So when you, and especially Ms. Booker can probably explain this farther as well, but a lot of people say, I'm going to pay off everything. You can lose points with that. Also, account diversity is 10% of your score. You don't want to just have a bunch of revolving accounts, meaning credit cards, lines of credit. You also want to have installment accounts. And those are going to be accounts that start with a balance that you pay down to zero. So think personal loans, student loans, mortgages, auto loans. We want to make sure that you can handle different types of debts. You've not only been going through life with just revolving accounts, but you've also had a car loan that you had to pay. You've also been paying a mortgage, and you've been showing that you're able to roll with those punches. Think about COVID. A lot of people lost income. Even now, there's a lot of people that aren't working right now because of the government shutdown. But if you're able to still maintain those bills and still make sure that those are being paid, you're showing that you're financially responsible because you have savings somewhere, because how else would you be making these payments? And then new credit, 10% of your score. And this kind of reiterates what Ms. Booker said previously. You don't want to allow people to pull your credit consistently. Again, every time someone does a hard pull, meaning they're looking to lend you money or provide a financial service, your score can drop 5 points. So like she said, if you went through the mall and you allowed 4 people to pour your credit, that could be 20 points that you lose. Another thing, when you're rate shopping, let's say if you're looking to purchase a home and you want to check with multiple lenders to see who can give you the best interest rate, you want to do all of that within a 30-day time frame. Equifax, Experian, and TransUnion, they're going to get notification and they're going to say, hey, this person is shopping for a home. We're only going to hit them point-wise one time. Now, if you start shopping for a home, decide, hey, this isn't for me right now, you come back 3 months down the line and you say, I'm ready to go again, expect your credit to be hit again point wise. Anytime you're shopping, do it all within 30 days, and it would only hit you that one time because they know you're shopping for a car. They know you're shopping for a home. Now, if you're going out to Macy's and then you skip over to Dillard's, yeah, we know those are all retail accounts, but they're going to hit you point wise every time for them because that's a different scenario, not necessarily shopping for rates with that. And then the largest portion, I skipped it because we moved right into debt utilization. 35% of your score is payment history. You always, always, always want to make sure you pay on time. If nothing else, pay on time. because anytime 30-day late hit your report, they're going to be on there for 7 years. And keep in mind, if let's say if money is a little funny, like right now, we have people again that aren't working because of the government shutdown. They
Mhm.
can make their minimum payment on their credit cards. That's fine. Make the minimum payment, but make sure that you're paying it on time. Don't just skip it in totality, because once you do get your money back where it's supposed to be, you want to be able to pay down that balance and your credit score go right back up because you were still paying on time. And once you pay down that balance additional amount, your debt utilization will go back to where it's supposed to be, and you'll see your score shoot right back up. So if times money isn't right, try to pay at minimum, just the minimum payment. Or if you can't even do that, call the lender. Sometimes they'll say, hey, you can just do the interest. They'll say maybe you can give us this payment a little bit later and we won't report it to the credit bureau. But please don't avoid those people, because if you avoid them, it's going to hurt your credit a lot more. They're more willing to help you if you reach out and say, hey, this is going on. Even with COVID and people in their mortgages, people were able to skip a payment or two or put it at the back of their loan because they reached out and said, hey, I'm being financially responsible. I want to make sure that I am able to cover this going forward. What can you do to help me? And they're willing to help you, and it doesn't hurt your score. But if you decide not to pay at all, your credit is going to tank. And then collections, if collections hit, majority of the time they drop you by about 50 points. So just always try to make payments on time, or keep in contact if you're unable to make those payments. I have a lot of clients.
I don't mean to interrupt, but I think we got some hands raised with some
Sure.
questions at the site. Go
Okay.
ahead, Christian. You got somebody at your site that needs to ask a
Yeah,
question?
we have two questions. One of the first questions was, you know how so hard credit pulls can lower your score, but is there any time where opening a new line of credit can raise your score? Such as this kind of ties into credit utilization, and something you mentioned earlier.
I have clients that are scared to have credit cards, and they can be scary because you can get yourself into a cycle that's hard to get out of. But I had a client for a year. I told him every year, get you every month I met with him, get you a secure credit card, get you a secure credit card. You're missing 30% of your credit score by not having a secure credit card. As soon as he opened that account, granted it took him a year, but as soon as he opened that account, his score went up 50 points. So you want to make sure that you're covering all areas of these. You want to make sure that you're covering every category. So you want to make sure that you're paying on time. You want to have revolving debt. You want to make sure that you're keeping accounts open as much. Opening, if you don't have a credit card, you're missing 30% of your score. So try to get a credit card. Like I said, my client previously that was trying to avoid it, once he opened that credit card, his score went up 50 points. So you don't want to miss any components of what makes up your credit score. Otherwise, you're leaving yourself at a disadvantage. You would never get to that 850 that you're looking to get to, or, maxing out what your credit score could actually be.
Okay. Miss Booker, did you have another question as well or some input on that?
I do. I'd like to share what Miss Tally said was right on point in terms of paying off. Because look at the model on the screen, and it's showing payment history, 35%. So that means 35% of your credit score is depending on if you pay on time. So that's the largest amount. So just paying on time, your credit score is going to increase. Now, the thing that I like about the total debt utilization, you see that's at 30%. And one of the things that Miss Tally shared is that most lenders don't like you to go over 30%. But let me give you an inside secret. The reason being is if you're charging over 30% every month on your credit card, that looks like that you're living off your credit card.
Hmm.
Well, Miss Booker, what's the big deal? you shouldn't be living off your credit card. You should have money set aside to take care of groceries, to take care of gas, to take care of just basic needs. So everything does not need to be charged on a credit card. If I charge a pizza and say the pizza cost me $30 today. So if I pay cash for that, I only pay that one time, right? But guess what? If you don't pay that balance in full, by the end of the year, you would have paid $100 for a $30 pizza, right? So lenders like to see that you're not living off your credit card, that you have money set aside that you can utilize to just spend on basic expenses. So that was one of the things that I wanted to share with you. Another thing that Miss Tally alluded to is saying that if you're late on a bill, so let's talk about that. For example, say, for example, Miss Booker has 5 accounts listed on her credit report. That is 5 opportunities for your credit score to go up, but it's also 5 opportunities for your credit score to go down, right? So let me show you how the system works. Say this is January. Say Miss Booker's credit score is 500. And by the way, if you're with a good lender, the majority of the time, they're not upset if you have a low credit score because they know the steps to take you through in order to get your credit score growing and increasing, right? So let's go back to my example. We have 5 accounts. And this is January 1. We paid the first one on time. Guess what? Credit score goes up. We paid the second one on time. Guess what? Credit score goes up. We paid the third one on time. Guess what happens? Credit score goes up. But then we paid the fourth one late. What happens? Credit score goes down. We paid the fifth one late. What happened? Credit score goes down. So why are you sharing that with us? I'm sharing with you to say this. The very points that they just gave you to increase your credit score, they took them away. Why? Because you did not pay on time. It's important that you don't pay just 1 account on time, not just 2 accounts on time or 3, but every account that's listed on your credit report needs to be paid on time. Now, you may be saying that, Miss Booker, all of my bills are due on the 1st. I can't pay everything on the 1st. That's why I allow 2 of them to go late. That's not what you should do. What you should do is contact that lender and ask the lender, may I change the due date on my account or loan? And yes, they may charge you a $50 fee, okay, to charge that due date. But that's better than paying that $50 fee is a one-time fee. Where if you're late every month, there could be a $30, $40, $45, $50 late fee added to your account. So it's your advantage to get the due date change more so than letting it run past due, right? And getting those late charges. Not only late in terms of money is it costing you, but it's costing you points to your credit score and possibly your history as well. So let's think about that as options when we're moving forward on ways that we can prevent those late fees that eat up our money and to prevent our points from being taken away from us. Now, another quick way to make your credit score go up, and a lot of people didn't know this, because oftentimes they'll say, Miss Booker, I have a credit card. My balance is $1,000 a month. My minimum payment is $35. I often will say to them, well, you know what? Why don't you pay $50 towards that on your first pay period? And then on your second pay period on the month, which is the 15th, try paying $35. Can you juggle that $85 this month? Because guess what? Paying extra twice a month on your credit card will make your credit score increase quicker. How do you know? I've done it with many clients. So those were some of the things that I wanted to share. Another thing that Miss Tally shared, and I hope you caught this when she said it because she was right on point. She said that when you're late, it stays on your credit report 7 years. I need you to write that down because I want you to understand that paying that $35 credit card late is going to show up on your credit report for 7 years, right? So, what's the opposite of that, Miss Booker? Good credit. So, write this down. Good credit will stay on your credit report for 10 years. Anything that has adverse action or negative, it will stay on your credit report 7 years. And 7 years from the date of that last activity, it will automatically fall off unless it's a charge off, unless it's a judgment, unless it's a certain type of foreclosure, unless it's a student loan late, unless it's an IRS debt. So I wanted you to know those type of parameters as well. Thank you, Miss Tally, for letting me share that.
No
Thank you.
problem.
Thank you, Ms. Booker. Thank you so much. Go ahead, Christian. I think we got a question on Christian's site.
Yes, there was I'm trying to remember what the question was, but there was a question about does the amount extra you pay matter on how much extra your score goes up? So if you were to pay like only a few dollars extra, will you get the same amount as if you paid double the minimum payment?
Credit is really tricky, honestly. We can't say exactly how much. I think there's over like 50 scoring models for credit. So you should see an increase making those double payments, but we can't guarantee how many points you'll go up just based on you put in a few extra dollars here or actually doubling the payment. But you should definitely see an increase. And the reason being, again, the lower that debt utilization, the better you look. So if you're starting with a $300 balance and you pay it down and the limit is 1,000 and you pay it down to $100, you should definitely see an increase in your score because again, the lower the utilization, the better because it looks like you're not, again, using it for your day-to-day activities. Credit is more so for emergencies or I'll use it. I use it for everything just based on rewards, but I also move the money immediately. If I go spend $100 at Dillard's, I'll use my card so I can get the rewards, but I move the money over immediately. So just keeping it that utilization as low as possible would be beneficial to you. Another thing, if you have someone around you that has really great credit, they're always paying on time, they keep their utilization low, ask them to be an authorized user, like your mother, your father, your aunts, your spouse. If they've done good with their credit, say, hey, can I be an authorized user? You pretty much piggyback off of their history and you can see your score shoot up that way as well. If you have children, they're just now getting out into the world or they're 16 or so, add them as an authorized user. You don't have to give them a card, but they can piggyback off of your history. And by the time they're 20, 21, they will have a great credit score. Most of the time, if people don't have credit, once they start opening accounts, they start off in the sixes. So again, our goal is to get you to a 700. So if we can get you added on as an authorized user in your teen years, by the time you're 18, 20, you'll be set. You'll be great. So
Yeah.
utilize the people that are around you. Also, one more thing with payment history, you do want to make sure that you're paying on time because again, any negatives will be on there for 7 years, but that does diminish. So if in the last 2 years you've changed your financial ways and you're now more responsible, it will not weigh as much as it did when it initially hit. 2, 3 years down the line, but it will definitely still show. It just won't have as much weight on your report, well, on your score, I should say.
Thank you, Ms.
Okay,
Tally.
any other questions?
Correct. I did that with my kids, something that wasn't done, of course, with me and my parents, because we just didn't know. But as we became educated, I ended up putting my kids on some credit cards and making them authorized users. So my son now, who's 20 years old, who's never bought anything, never applied for anything, his credit score is now 750, just at 20 years old. So you are absolutely right about that.
Absolutely.
And if I could add something there also, I love how they have that option of being an authorized user,
Mhm.
but it can also have a reverse effect. So if this is a person that was paying on time, but now they lost their job, they're unable to pay, as an authorized user, you are not required to pay that debt because you're just the authorized user. But guess what? The same way that it's going to make their credit score decrease, it's going to make your credit score decrease as well. And so if you're in the process of purchasing a home and someone that have you as a authorized user and hadn't been paying the bill, you can request that that be removed from your credit report.
Okay, good information.
Okay. So we will move on. And just reiterates what we were just saying. Improve your credit. Make sure you're maintaining positive payment history. Keep accounts or credit utilization low to maintain a good score. Keep accounts open as long as you can. The more history, the better. You look a lot better having 10 years worth of good payment history versus one. But we know everyone has to start somewhere. So don't be alarmed. Limit opening new accounts. Only open accounts when absolutely necessary and try to keep it to a maximum of two. And then check your credit reports regularly. You can get your free credit report at annualcreditreport.com. It's going to show all three major bureaus, Equifax, Experian, and TransUnion. Since COVID, you can actually get this weekly now. I will tell you, it will not give you your score. It will just show the information that's being reported to each bureau. But it's definitely a good way to check that information. Another great advancement, considering the times that we're in, Equifax, Experian, and TransUnion, they all have their own websites. So if you created a login with them, you can get notifications. Anytime someone accesses these reports, you can actually freeze your report, which is something that I strongly suggest, especially if you have a really common name. One of my clients has a very common name, like Michael Jordan common, and he has good credit on his own, but he keeps getting tied up with fraud. And it's more so of a mistake just because of his name is so close. And if the birthday is close, here we go. So we've been dealing with a lot with that. So if you could go, and not even just if your name is common, security wise, if you could put a freeze on it, it's great. Because if you go into, let's say, rooms to go and say, hey, I want some new furniture, before they can pull your credit, you're going to have to unfreeze it. So that gives you all the control in the world. It's not like someone can just be on the black market and gain access to your information and open account after account. Why? Because it's already frozen. So that's a good security step that you may want to take in regards to securing your credit. And then I was going to ask this question, but I think we're a little pressed for time. Am I correct, Patrice?
We're actually good. We might run over.
Okay.
And if Miss Booker, I know you may have some other commitments. If there's anything that you need to say before, we go on, feel free to chime on in there because I don't want to overextend my invitation to you. I do appreciate you hopping on with us today.
No problem.
Go ahead.
So we're just going to dig deeper into your financial health. If someone can answer, probably two or three people, if someone can say, one of the options or choose one of the examples of how they're feeling financially, is today a stable day for you? Are you feeling stable? Are you feeling anxious because groceries are expensive? Are you anxious because you don't know exactly what's going on with our government? Do you feel like you're improving, you're hopeful, you're going in a great direction? If someone could give a little bit more insight or ask a question, or just give some insight on how you're feeling financially using one word.
I want to hear from somebody at our Magruder site. How are you guys feeling about your financial status right now? Somebody said building. Donna said building.
I love building. I love building. And I say that because that just shows me that you have a great mindset that's open to learning new things. And as long as you're willing to learn something new, you can always go farther in life. So kudos to you for being in a good place. Anybody else got an answer?
One person in the back said overwhelmed.
It's overwhelming. And definitely, I think a lot of people are overwhelmed right now. So don't feel bad. Just think about ways that you can make improvements. And if you don't know where to start, that's why organizations like Operation Hope are available to you free of charge. So if you come in, we can go over your budget, we can go over your credit report, and give you a plan that's tailored to you specifically to get you to one of those better financial health words. So stable, improving, things like that. Does anybody else have a response?
Confident.
Yeah.
I
I think we heard,
They put me on a credit card, so that way I can get some credit.
I'm
I think
sorry.
I heard, was that confident at Magruder?
Yes, confident.
Confident. Somebody said confident.
Love it. Love it. So yeah, it's a lot of different, it's a wide array of feelings right now that people are, feeling with their finances in this moment. Kind of scary. Some people are having the time of their life right now. It really depends. Everybody is coming from a different walk. People are on a different path. But if any assistance is needed to get you to where you would like to be and you feel like you don't know exactly where to go, Operation Hope is here to help you make sure that you can get on a good financial playing field. Okay. And again, all services are free of charge and we stick with you until you achieve your financial goals. So moving forward, money management. Budgeting is the strategic allotment of income to various expenses, savings, and financial goals, ensuring a balanced and intentional approach to managing one's finances. In short, budgeting is the key to financial success. And I can't see you all, but just a show of hands, who in here would think that if they hit $50 million, hit the Powerball for $50 million today, show of hands, who thinks they will still have at least 25 million in 5 years? Do we have a lot of hands?
I
I
said,
see some hands at Anastasia's site.
yeah, we got some hands at Anastasia's side. What about you, Christian? We got any hands there?
Sorry, give me one. Can you repeat the question?
Donna, we do. Donna said she would. Donna's at Magruder. She said she would.
So if you were to hit the Powerball for $50 million, how many people think they would have $25 million in 5 years?
Sorry, you're cutting out on our end.
Let me repeat that. She said if you hit the Powerball for $50 million, how many people will still have at least half of that in the next 5 years?
Oh,
Most people lose it all within the first 2 years.
cheapest person you will meet, like I would still have it. Been holding on to. I think different with you. I think I'm the cheapest person in there.
So how many people at your site, Christian, would still have it? We just need a number.
So you said you would have it?
Yes.
You said you would have it, Mr. Samin. Would you still have it in 5 years? So everyone here said that they would probably still have it within 5 years.
Okay. So most people think they will. 70% of people are going to be broke, statistically. And it goes to the fact that regardless of how much money you have, if you don't have a budget, um, you're not likely to be financially successful. Regardless if someone throws $50 million at you today, if you're not budgeting to make sure that you continue to grow that money, you're liable to be broke. And that's why it's such a large amount of people that don't have that. They say, hey, I hit the lottery, but now I don't have anything to show for it. There's even reality TV shows about people that went broke after winning the lottery. And most people look at them like they're crazy. Like, how could you go broke with $50 million? I'm surviving off of 75,000, 40,000 a year. How could you go broke with $50 million? Lifestyle inflation. So the key to a financial success is budgeting, regardless if that amount is huge or if it's small. Budgeting is going to be the key to financial success. And ways budgeting can help you is going to help you track where your money is going, allow you to prioritize expenses, keep your spending aligned with your income, help you achieve financial goals, and create awareness of spending habits. With Operation Hope, one of our big things is money management. If you come in here today and you say, hey, I'm making $4,000 a month, but I'm robbing Peter to pay Paul, we're going to write down everything that you're spending. And when we write it down and I say, hey, well, you're spending $300 eating out, we could probably trim that down and you would be in the positive versus the negative. So it's small things that we're spending our money on that are putting us outside of where we would like to be financially. And if we can look at it, because, and I always say this, numbers do not lie. If we can look at it and we can see, I'm really giving food places $300 a month when I can go to the grocery store and save $200 of that, that's kind of like a moment that people just sit back and they're like, wow. And they think about all of the things that they could do with that additional $200. So writing down all of your expenses is going to help you, is going to serve you so much financially. And then not only writing it down, but tracking it, because I have so many people to say, well, I spent $100 eating out, but when we actually look at their bank statements, they're spending 250, 300. So tracking your expenses goes hand in hand with budgeting. And you can track your expenses however you want, just as long as you do it. Some people write down everything. Some people use apps. Some people go through their statements. I'm a person that likes to go through my statements because I use my debit card for everything. I'll use my credit card, then I'll transfer the money. I'll transfer the money so I can get those rewards, but I still have to make sure that I'm tracking everything. So I'll go through and I'll look at my statements once a week. One of my clients, she was missing over $1,000, and she was like, I don't know where it's going, but she was a preacher and she was blessing people, as I like to say. But once she was able to get that in control, she was able to still bless people, but she was able to get her finances where they needed to be. And now she has a big amount of savings. She's moved recently and she's looking for a new home in Florida, and she feels financially free. She doesn't feel burdened. And all it took was her tracking her expenses. Sometimes people say, well, I give my mom money here, I give my daughter money here. And they don't realize that they're burying themselves in debt when they could just say, hey, no, I don't have it right now. And they can get themselves together and then they can easily give. You can't pour from a cup that's half empty. So make sure that you get your finances together before you're giving. And again, that goes hand in hand with budgeting, tracking. So review this information as you're tracking it. If you notice before you were spending $300 eating out and you've dropped that down to $100, what are you doing with that $200 now? Did that go to another habit or another hobby? Figure out exactly where you can put that money to make it to make you better off financially, whether it's paying down debts or putting those additional funds towards your car note and getting done with that earlier. And then also make sure that you're identifying expenses. You don't want to focus on only the regular expenses. So we know rent and mortgage is going to come every month, but what about those oil changes? What about those new tires that we need? We know they're coming, but when exactly are they coming? Plan for them. If you know your oil change is $80 every 4 months, you should be putting $20 to the side. You should be putting it. You shouldn't just be coming out of your wants account. And I'll go into wants a little bit later, but you shouldn't just be pulling from your play account or your want account for an oil change when you know that it's coming up. It's not every month, but you know it's coming up. Plan for it. And that's all a budget is planning. Okay. Any questions about budgeting?
I'd like to add something if I could. If you could go back to that screen. So I like to share this. I love how you've presented this. And I would like to add just every dollar that you make must have an assignment or it'll fly away. So when you have you're getting paid on Friday, you should already have a budget. Some people say, well, I don't like the word budget. Okay, let's call it a spending plan. Whatever makes you feel good, we can call it that. What that's doing is you've put a tool in place to identify what your money or funds are going to spend, what you're going to spend it on. So if you don't, that money is going to fly away. And don't spend money before you get your paycheck, right? Now, I'm going to give you some names. I'm just going to call out some names. What do you think MC Hammer, Kim Basinger, Mike Tyson, Burt Reynolds, Cyndi Lauper, Tony Braxton, Larry King, Walt Disney, Marvin Gaye and Willie Nelson have in common? I'll give you 1 second.
Can I answer?
Yes.
Bankruptcy.
Yes. They've all filed bankruptcy.
And Mike Tyson.
So, as Miss Tally was sharing, if you're not keeping up with the flow, the tracking of your money, what's going here, what's going there, how much are you saving? Guess what? That money flies away,
Mhm.
right? And so we
Mhm.
want to make sure that we're tracking all expenses, placing them in their proper categories. And so you may want to say, well, Ms. Booker, what do you mean proper categories? Your entertainment bill every month should not be $800 of your paycheck if your paycheck is $1,000 a month. Entertainment shouldn't exceed your mortgage or your rent, or because if it does, you're going to see that down the line. Another thing that Miss Tally said, she alluded to, was your bank statement. I want you to know that the lender will be looking at your bank statement. But what I share with people is that I can tell a whole lot about you just by looking at your bank statement. Okay. And so lenders can tell a lot about you just by looking at your bank statement. I want you to know that they're going to go down that bank statement, right? They're checking to see if you are a good money manager or a bad money manager. If you're a promise keeper or a promise breaker, right? They're going to put your credit report right next to your bank statement. And they're going to see if every account that's listed on your credit report, if a payment is coming out for it on your bank statement. A lender is going to do that. Now, I want to share with you something. I want to show you how important it is to understand the tracking of expenses, grouping expenses, and understanding the allocation of income that you have coming in. So I had a client that came to me and said, Miss Booker, I need a new car. My car broke down, but I just can't afford a car note. And so I asked him, I said, well, bring me your bank statement and let's sit down and let's go over it. So I said, what amount can you afford a month? He said, well, I found this car on this the note lot, and it's only going to be $200 a month. I said, okay. So I wrote that $200 down. The next thing I did was I began to go down his bank statement, and I saw every week he was going to a place called Wendell Smith. If you're not from this area, you may not know what that is. So Wendell Smith is our restaurant, right? And he was easily spending $10 to $12. So let's keep it basic and then we'll say 10. So in 5 days for lunch, he spent $50, right? In 2 weeks, that's 100. In 3 weeks, that's 150. In 4 weeks, that's what? That's $200. There's your card note right there, right? So I want to let you know, just looking at the money that you've allocated for other things and decreasing in those things can help you to reach your goal. His goal was he wanted a car. He had found the car. The note was going to be $200, which is very modest, right? Okay, I said, and if you want to pay for insurance, let's go a little bit further because I hope you're going to have insurance. I said, I noticed that you're going to Starbucks every day for coffee. Okay. Now, his Starbucks, I don't know what he was buying there because it was different amounts. One day it was 7, one day it was 9, one day it was 12. So I don't know if he was throwing a croissant in on some day or what. But let's just go on an average of $10. Okay. There you go again. There's another $200. So I told him, if I can get you to drink the coffee from your office, guess what? That's saving you $200. If I can get you to take your lunch, that's saving money as well. So remember, when you are setting goals and you're having to decrease, look at some of the things on your checking statement that's revealing to you what percentage you're spending out for food, for coffee, for cigarettes. He was a smoker. He smoked a pack a day. Okay, we know how much that can cost as well. So now you've paid for insurance, your car note, and you got gas money just from looking at cutting down or back. Now, let me say this. I've had one person to come in. She indicated, Miss Booker, I don't know what I'm going to do. My job is decreasing. I've gone from 40 hours. They've cut us back to 30. I said, let's look at your bank statement and see what you can cut back at. I said, well, I noticed your cable bill is like 275. I said, have you ever thought about reducing that or eliminating it for a period? Now, keep in mind, when you are tracking your expense, we're not saying you have to get rid of cable for your whole life. We're just saying right now something else means more important to you than this cable, and that's keeping the boat afloat, right? And so you have to make some changes in your budgeting, in your money management, because if you don't, guess what? The boat will sink. So I want to remind everyone always to make sure that every dollar you have assigned it to something, track your expenses, and make sure that you are putting some money aside for savings, like Miss Tally said. It doesn't have to be a drastic amount. See, Miss Tally may be able to save $50 a month, where I may only be able to save 10, right? But I'm still saving, right? So that's
Mhm.
what I want us to get accustomed to. Because guess what? We're all going to experience an emergency one day. It's going to rain on the just as well as the unjust. And so when you have money setting aside in an account that you can retrieve money from and pay down, guess what? That eliminates anxiety. It eliminates stress. It eliminates worry. It helps you to be able to think more clearly, right? So I want us to make sure that we're thinking about those things as well. Lastly, let me say this. One of the things that Miss Tally talked about was fraud, and I want you to know that fraud is real. And I loved how she talked about freezing your credit report. But I want you to take that thing a little bit further too. There are some things that some people may not know that they're doing that could possibly cause harm. How many of us, when we get mail, and it's something we don't want, we just throw it in the garbage can. You didn't shred your name and address or anything. You just threw the whole thing in the garbage can. So now someone has access to the way your names appear professionally. They have your address and they go apply for credit in your name, right? You gave them to the tool to do that because you're not shredding the items that you're throwing away in your garbage, right? If you're not shredding and your credit report does not have a freeze, guess what happened? Someone just applied for a credit card in your name. And they'll start small. They'll just ask for a $300 limit or a $500 limit just to see if they can get by with it, right? So now they have a credit card in your name. They're going to go spend it all on the same day. Guess what? You will not find out about that credit card until 30 days later when you get the bill in the mail. And you're like, I didn't apply for a card with this company. And so you get up on the phone and call them. And when you call them, they share all of this information, where you spent the money at, all this. So now you have to do fraud and police reports, all this stuff, because we didn't shred the information that had our important information on. Be very careful about your documentation. I wouldn't throw it away. I would shred it, right? Just for safety purposes only. Thank you for allowing me to share that, Miss Tally.
No problem.
Thank
Thank
you.
you.
Let me piggyback on that. Both of you are absolutely correct because I lived that. Someone got a hold to my name and address and was getting all kind of credit cards in my name. And had I not known about freezing the credit report, Miss Tylee, when you first did our financial literacy seminar, I wouldn't have never known that you could do that. It's very real out here. People will get a hold of your information and people will get credit cards in your name. And then I too had to go through that whole process of proving that it was not me and going through the company and filling out all kind of paperwork in their fraud department. And that's a headache. Trust me, that's a headache. So really, you really have to pay attention to information that you give out, as well as making sure that you freeze your credit score, freeze your credit reports, as well as looking at your credit reports from time to time.
Mhm.
So
And no problem. But to piggyback off of what Patricia said, definitely I would suggest creating a username and password with each one of those bureaus, just so you can get notifications every time your credit is even accessed. So if someone gets your information and they go submit it, you'll get a notification immediately saying that someone, hey, your credit has been pulled, and that can notify you that someone has your information if you know you didn't do it, and you can kind of get on it a little bit earlier. But to prevent that, just put a freeze on it.
absolutely.
So I do have to run shortly, but I do want to wrap it up in going into savings. Savings are a cornerstone of financial well-being, providing a safety net for unexpected expenses, opportunities for future investments, and a foundation for achieving long-term goals, thereby fostering financial security and resilience. In short, savings is going to be the difference between a setback and an inconvenience. And I know we've said it time and time again on this call, but life is always going to throw you a curveball. Expect life to life. You want to make sure you have something to the side for savings. And I always use a car. Think about if you have a car and you go out and you get in an accident. God forbid, we don't want it to happen. But if it did, and if you don't have insurance, now you're forced to look for another car. You're forced to cover any expenses that may have arisen from that. Let's say if you hit someone and cause them to be hurt, now you have to pay their medical bills and all of this. But if you have insurance, you can just put your car in the shop, pay a deductible, get it repaired, and you're back on the road. If not, and that's considered an inconvenience. I'm inconvenienced for a week or two. I have to Uber, I have to ask someone to take me to work. But imagine if you didn't have that insurance, or even if you didn't cause harm to anyone else and you still just didn't have the money to get your car fixed, you would be set back. You still have to figure out how to get to and from work, how to get your kids where they're supposed to go, how to do all of this and figure out how you're going to repair the car. For a lot of people, that's a setback. So always put money to the side for those things when life chooses to life. Set up your emergency savings plan, an emergency savings account. You want to aim for 3 to 6 months worth of living expenses. For number's sake, if it costs you $2,000 to get through the month, at minimum you need $6,000 in your savings account. When building this account, you want to focus on essentials and avoid discretionary spending. I had one of my clients say, well, I went into my savings for Beyonce tickets. I said, girl, Beyonce is up there working. Why would you go in your savings to go pay her to work? So, and I'm okay with you going to see Beyonce. I will never tell you to work and just pay bills. Live your best life. Life is so short. You want to make sure that you have additional funds that you can put towards things that you want to do. If you like to travel, if you like to go to concerts, make sure you have an account for that. And that goes back into that budgeting piece, which if you come sign up, if you do one-on-one coaching, we'll go over your budget. We'll say, hey, this is the amount that you have to play with, because you always want to play with something. Or if you don't have funds to play with, we're going to figure out exactly what you need to do. What skills do you have that could garner additional income? Or do you have a small business idea that we could give you a small business coach and help you grow that? But you just want to make sure that you're well financially, because again, you don't want to be burdened and say, hey, everyone else is going out doing these things they love to do and I'm living paycheck to paycheck. So just make sure that you put something to the side for savings. Also make sure that you're using high yield savings accounts. You want to make sure that your account is actually giving you some bang for your buck. You don't want to go into an account with a 0.123% interest rate, because at the end of the year, that's a penny with a hole in it. We want to look for 4, 5, 6% on those interest rates. You also want to make sure that you're setting up automatic transfers. If you're going to do a direct deposit into your savings. Don't just put it all into your checking, out of sight, out of mind. Only use funds for emergencies. And as your life changes, increase the amount that you're putting into it. If you have a child, we know they're expensive, decrease it, but still put something to the side. As Ms. Booker stated earlier, somebody may be putting 50, you may be putting 10. Either way, you have something to fall back on. Just make sure that you're putting something back because life is going to life. I am going to hop off, but I am going to leave you all with my digital business card. Gives you the opportunity to follow up with me one-on-one by email, phone, text, or you can register and set up a coaching session and we can get you a plan started that's tailored for you specifically. Does anybody have any questions or concerns before I hop off?
Anybody at Magruder or at Martha O'Brien? You got something, Christian?
No, I was saying no one on this end.
Okay, well, thank you so much, Ms. Talley. I do appreciate you and your expertise. You've given us a lot of rich nuggets to go by that's going to help us plan financially. Trust me, you have helped me personally because, like I said, I didn't know about freezing my credit. So thank you, thank you, thank you. Again, you've done a superb, marvelous job, and I just hope that this information that our students are receiving will definitely help them plan financially for their future.
Oh, thank you so much for having me. And thank you all for listening, chiming in with your questions. I really appreciate it so much. And don't forget, our services are free and we can help you get to where you want to be financially. No judgment zone at all. But again, you all have a great day and thank you for spending a little time with me.
No problem.
Thank you.
Thank you. And we do have Tanisha's information that we'll be able to give out to our students if nobody got it real quickly.
And it's
Uh,
in the chat box. I put
oh,
it
it's
in
in
there
the
too.
chat. Okay.
Mhm.
I got it in the chat. So definitely those of you who are on with us, Donna, Miss Erlene, we got it.
Bye.
See you later.
Bye-bye.
All
Thank
right. Ms. Booker, we're going to go into that first time home buyer process. Do you have
Yes.
anything you need to chime in before I actually kind of reiterate that once they got their credit together, they've found a lender, what's next?
So before I jump straight into that part of the presentation, I do want to share one little extra tip on the savings end. I love how Miss Tally shared how important savings was, right? And
Yes.
so I always tell clients, you know you better than I know you. You
Mhm.
know your spending habits, you know your saving habits. So if you feel like it's challenging to save, let's find a way that would be easier for you to save. So, one of the things we've often done is to start a savings, of course, and say, for example, if they get paid on the 1st and the 15th, have the money go directly from their checking account into the savings, not trusting themselves to put it. But this is the caveat to that. You want to put it where the savings account is not attached to your debit card
Mhm.
and you don't have access to it. So I had a person who was from Mississippi, but she was living here in Nashville, Tennessee. She opened up her savings account in Mississippi, right? The money would automatically be and go to her account in Mississippi, direct deposit. This went on for a couple of years with her not even thinking about it because it wasn't attached to her debit card. By not being attached to her debit card, guess what? She can't see it when she's trying to see money that's available for usage.
Oh, wow.
So a couple of years later, she looked at it. She said, Miss Booker, she said, I don't believe this. I have over $4,000 in my savings account. She said, it's like you set it and forget it,
Mhm.
right? And that was one of the tactics that she used. She did not want it attached to her debit card. So I just wanted to add that part before we went on into the lending process. So you tell me when we're ready to start that lending process.
Oh, we're ready now. So,
Okay, well, we'll jump on in. So, first of all, let me say my name is Lisa Booker. I was a loan officer for 21 years, and I've been a home buyer education for a counselor for 24 years. And I share that with you for only one reason, and that's to let you know you're in good hands. There's not many questions that you can ask me about this arena and I not have the answer to. So I want to let you know safe space and some wisdom is sitting right here that can share the information and answer the questions that you have. Now, one of the very first things I always do when a client comes into me and tell me that they're interested in purchasing a home, I do what Miss Tally just said. I pull their credit. Why? Because it's important for me to know where you are, and I want you to know where you are as well. You see, your credit report is screaming things about you. Your credit report will tell me if you're a good money manager or a bad money manager. Your credit report will tell me if you're a promise keeper or a promise breaker. If you like to shop, I'll know because your credit report will show me you have 10 credit cards on it. You see, your credit report gives the lender a more intimate picture into who you are. Your credit report discloses your behaviors. Your credit report discloses your not just what your behaviors but your patterns. And so that's what a lender is looking for. What is your pattern? What is your likelihood of paying us back if we give you some money, right?
Mhm.
Now, I got a question for everyone, the audience. Now, what would you be interested in asking a person? Say Miss Booker want to come to you, Donna. I'm gonna call on you, Donna. I want to borrow, say, $100 from you. Would you let me borrow $100 from you if you'll come off of mute and tell me that?
I see some heads nodding at Magruder. They said yes.
So that you would let me borrow $100 and you don't know me.
Oh, I'll have to know you, but yeah,
Okay,
I
that's what I want.
would.
So
I
one of
forgot
the
about
things,
having to know you, but I
I
already
said,
know you, so yes.
okay, so you are right. You already know me. So, but if you didn't know me and I wanted to borrow $100 from you, Renee, would you allow me to borrow that $100 from you?
I don't know. I would have to make up an agreement, write out a contract. Because I hate for you to have to
See,
want something and can't get it.
I love the way you're thinking because you're thinking just the way a banker is thinking. They're thinking, okay, I don't know you, and you've come to me and you didn't ask for $100. You've asked for $300,000 to buy a home, right? So,
Mhm.
in order for me to give you these $300,000 to buy a home, I got to feel a little bit more comfortable about giving this money to you,
Mhm.
right? So, what would make you comfortable? What document or what can I give you to make you comfortable? Anybody in Anastasia's class or Earlene, what would make you comfortable in loaning me that money?
I get that necklace you got on your neck, but
Oh,
yeah,
no.
some kind of collateral. There has
Oh,
to be
I like how you
some
think it
kind of
again because you're
collateral.
saying collateral. Okay,
Duh.
I got that. Who's the young lady sitting beside you? I would like for her to tell me will
I
you
will,
let me borrow?
uh, I will have to get your information and stuff and check on your credit and stuff and see, before I let you borrow anything.
There you go.
I'll come up
Y'all,
first.
oh, I'm just loving how you all are thinking, both you and Renee. Because that's exactly what the bank is looking. Okay, how can I get to know you? I don't know you. How can I get to know you? And guess what? They get to know you by your credit report and they get to know you by the documents they're going to ask you for.
That's true.
Okay? So your credit report is going to tell them the likelihood of you paying them back on time. So they pulled out Ms. Booker's credit report and they could say, oh, Ms. Booker, I see that you've had 10 lates on your credit report within the last 10 months. So do you think they're going to be comfortable about lending me some money? Yes or
No.
no? There you
No.
go. No. Because what they're saying to me is if you're not paying your creditors back that you're getting ready to borrow from right now, what would make me think that you're going to pay me back and the money we're getting ready to give you far exceeds any of the accounts that you have on your credit report? Your
Mhm.
limit on your credit report on a credit card may be 1,000, 5,000, 7,000, but we're talking about 300,000, 400,000. 500,000, 200,000 for a home, right? And so if you're not paying them, you're not going to pay us. So the very first thing that the lender is going to do before they go any further, before they ask you for any documents, they're going to
Mhm.
pull that credit report.
Right.
They're interested in two things on that credit report. And I want to make sure you write this down. The very first thing that they're looking at is your credit score. What is this person's credit score? Because your credit score will let them know if you have a pattern of paying on time. Now let me let you in on an inside secret. I had a client once that said to me, Miss Booker, I pay everything on time. I don't know why my credit score is 350. There is no way that you're paying everything on time if your credit score is 350. And let me share with you. Now, credit scores range from 300 to 850. At any time that you have a credit score that's in the threes, the fours, or the fives, the lender knows you automatically have had some issues. Issues with what, Ms. Booker? Keeping your promise, paying your bills on time, keeping your commitment, right? Because when you sign on that dotted line, you are saying to the lender, the person who's giving you the money, I pledge, I promise that I'm going to pay on this day. And if I don't pay on this date, you may add this late fee to it. Now, if Miss Booker has 10 lates within 10 months, it look like I ain't paying nobody on time, right? So the very first thing that I would advise that person, and I'm never harmful, I would say, hey, let's sit down and let's come up with a plan that will increase your credit score first. Increasing your credit score is going to automatically increase your credit history. That's an inside secret. Because, see, people are just focused on that, just the score, just the score. But I want you to be, it's important that you know about the history as well. Miss Booker, why is the history important? Because, like we said, good credit stays on your credit report for 10 years. Anything that has adverse action will stay on 7 years, and 7 years from the date of the last activity, it falls off. So, what your lender is going to do if you're getting an FHA loan, they're looking at your last 12 months.
Mhm.
How many times have Miss Booker been late in the last 12 months? And so if I don't have any lates in the last 12 months, FHA is more than likely will give me a home loan, right? And so we'll teach you about those things as we navigate on the journey of home ownership. Because I don't have a lot of time, I want to go over some of the things that's required from you from a lender. So now say I pulled your credit report, you don't have any lates within the last 12 months. Let's say your credit score is 640, because you know we talked previously how to determine what your credit score is going to be. They're going to eliminate your highest score, eliminate the lowest score, and everything is going to be based off of that middle score. The next thing I'm going to do is go down that credit report and see, do I see any lates within the last 12 months? And let's say right now we're in November and your last late on your credit report was in let's say May of this year. That means you're going to have to wait till May of 2026 because that means it takes 12 months to clear it, right? So you don't have any lates within that last 12 months. So again, I'm looking down that credit report to see if you have any lates within your last 12 months. So let's say now this is May and I don't have any lates on my credit report in the last 12 months now. So I'm going to have you to collect some documents that I need you to share with me. Why? Because my audience over at Anastasia said, Miss Booker, I need to know a little bit more about you. And I'm going to tell you, your documents is going to tell your lender a lot about you. So if you would kind of just jot down these documents, your lender is going to ask for your two most recent W-2s. Your lender is going to ask for your two most recent tax returns. Your lender is going to ask for 1 month of pay stubs. Your lender is going to ask for your two most recent bank statements, all pages. They ain't gonna let you hide nothing. And the lender is going to ask for a copy of your identification, which most people will just use their driver's license or their state ID. That's how your lender gets to know you, by your documents, right? So I just want to take a road trip on all your documents. Let's talk about them. So I've said what the lender's going to ask for your two most recent W-2s and your two most recent tax returns. So let me share this information with you. Some people may not have filed their tax returns, but they send W-2s. Guess what? Another inside secret. The lender is going to contact Internal Revenue. They're going to verify that whatever tax returns you turned into them are the same tax returns that you turned into us. And if they come back with a transcript saying this person hasn't filed taxes in 4 years, guess what? In order to get a home loan, you have to file taxes, right? They're
Yes.
tracking your income, right? So you would have to have tax returns for the last 2 years, unless you're using a different form of income other than a job. And you may want to say, Miss Booker, what other form? Social Security. It could be disability, could be child support. So they track that income differently. But if you're turning in a W-2 or a tax return, they're going to contact the Internal Revenue. Now, they never share that information with you. Basically, they're going to tell you your file is in underwriting. And so when they tell you your file is in underwriting, that means your file is being reviewed. They're getting to know you by the documents that you have just turned in. Okay. Now, say you filed your tax returns for 2 years, and so that comes back good. The next thing they're going to look at is what? Those pay stubs, right? And they want 1 month worth of pay stubs, right? And what they're going to do is they're going to look down that pay stub to make sure that it matches everything that you told us on your application. On your application, you said you made $15 an hour. We're going to go over to that pay stub and we're going to look, does it say $15 an hour, right? If it does not, guess what? They're going to change your application to the true amount. What are you saying, Ms. Booker? They're going to verify everything that you turn into them. So when your loan officer tells you that, takes your application, get your name, address, social security number, and she's just talking with you like a casual conversation. Oh, where do you work at? Oh, you work for MoreComputing. Okay. What position are you in? Educator. Oh, that's awesome. How long have you been there? 3 years. That's wonderful. How much you make an hour? See, they're just talking with you like a casual conversation, but they're documenting every bit of this. Okay. And so when they get your documents, they're going to check to see if your documents match what you just told them. So the very first thing they're going to be looking for on those pay stubs is, does this person have positive or negative deductions. So I want to ask you, what do you think a negative deduction is? Anybody? Erling, Donna, somebody in Christian's class, somebody in Anastasia's class. What is a negative deduction?
Think that's what you owe.
Yes, you owe it. And in what form if they look at it as a negative deduction out of your pay stub?
It's money that gets automatically taken out.
That is correct. And why
Yeah.
are they taking it? Is it by force or choice?
By like court order or
There
something.
you go. That's what I was trying to get to is so a negative deduction is something like a garnishment, right? They are garnishing your pay because you didn't pay a bill or you didn't pay a debt, and now they're garnishing your pay, and that garnishment is coming out of your paycheck. So when a lender looks at your paycheck and is showing you have a garnishment, that means someone had to force you to pay them back. Now, my question to you is, how does that look to the lender? Do you want to give some money to somebody that had to be sued? Somebody answer that for me.
No, they
Tell
not.
me why.
They don't like to pay.
Don't like to pay. What about you? Get ready to say, was that you, Donna?
Yes, ma'am.
Okay. Christian, you were getting ready to add something too. That was right, Donna.
Yeah, it was definitely a no, because if they can't pay that, they can't pay the loan.
There you go. And the lender is considering that. You know, let me share this. It doesn't matter if you've had a blemish on your credit report that you got past due once, but at least you did what you said, you know what? This is my debt. I've got to make it right. Let me call this creditor and say, can you put me on a payment plan where I can pay $10 a month? Can you put me on a payment plan where I can pay $20 a month? So your lender is looking at it. That company didn't sue you. And that's major. The lender likes to know that they're not going to have to sue you to get you to pay them back, right? And so if you don't have any garnishments listed on your pay stub, thumbs up. They like that, right? Another negative deduction would be child support, separate maintenance, alimony. Well, Miss Booker, why would they look at that as a negative? Because you didn't report it on your loan application that you were paying those things. And that means they now have to take that away from the income that you said you could use to pay your mortgage. So they're going to deduct that child support or that alimony or that separate maintenance. And so wonder if they had already pre-approved you and they had approved you for 300,000, but your child support is $300 a month. That's going to reduce the amount that they can qualify you for now. So now where you were going to be approved for 300,000, now you're down to like 230. But the house you're looking at is 300, right? So got to be careful in what you're reporting to your lender. Please don't leave anything off. They have their way of finding out. Okay, so go right ahead, Kristen.
Yes, I got a quick question, Lisa.
Uh-huh.
Now that we're talking about debts and things that affect your debt to income, how does student loans affect someone who wants to get a mortgage? Let's say they owe $40,000 in student loans. How does that affect?
Beautiful question. And thank you for asking that. And so, as everyone knows, half of America got student loans, right? And at one time, the lending law was as long as you don't have a repayment period within the last 2 years, if you had zero on your credit report as a payment because it was in forbearance for 2 years, they didn't have to count that as a payment. But lenders soon realized that that wasn't a smart tactic. Why? Because you're going to have to pay those student loans back one day, right? So now they allocate a payment, right, for a student loan, right? So there's a certain payment that they will put in, they will plug in, even if you're not paying that student loan back right now, because they know one day you may possibly have to pay it back. Prime example, we had a client, and I know my time is running thin, but let me just get this part out. We had a client who had like 10 student loans on their credit report, and they all were in forbearance. She was in school, but she was working full time. They indicated that she would be out of school in 4 years, so we knew there wasn't going to be a payment within 4 years or whatever. And so when she got out of school, for the first semester, guess what? She decided she wasn't going to return, right? If she didn't return, guess what? Payment automatically kicks in on those student loans. If she would have had her house note, she wouldn't have been able to afford it, right? So they are going to allocate a payment just to make sure that they're not putting you in more home that you can afford. Now, one of the things that I'm liking also, a lot of people were given forgiveness on some loans. I have several people for the organization that I work for that had over $100,000 in student loans that were forgiven, and that is just magnificent. So, if you're one of those people that one day that will have student loans to be forgiven, they still have to count a payment in until the student loan has been forgiven. I'm sorry, but that's one of the lending laws. Okay, Christian, you had a question.
Yes, ma'am. So if you are getting your check garnished, but you pay it off so it's no longer being garnished, would that negatively affect you in the future? Would they be able to see it happen in the past, even though it's no longer happening now, or do they only care about the most recent check stubs?
You are magnificent. Thank you for asking that question. So remember when you're purchasing a loan, they ask for 1 month worth of pay stub. It has to be your four most recent pay stubs. So if Miss Booker is getting paid every week, I'm going to provide them the pay stub for all of November, right? So say, for example, if November is reflecting a garnishment, right? But I've been paying on that garnishment all year, and this is the last payment for that garnishment. Guess what? That lender is going to allow you the opportunity to explain what has happened. Now, if you have a 700 credit score, but you have to explain that one garnishment that has one payment left, the lender will allow you to do that. You could say something for like, say, for example, Miss Booker may say, I was in a car accident. I was unable to work for 3 months. The automobile company automatically came after me to garnish my paycheck. This is the last pay stub. They're going to make me provide proof. And they're going to also call the person who has the garnishment to confirm the story that you're saying, right? So in unique situations, they will let you make that determination if they will allow you to move forward in the process. Now, if you have a story for everything, like, okay, I got a garnishment on a paycheck, I got negatives on my credit, on my bank statement, non-sufficient funds, my credit score is 500. That's too many things. That's not stable, right? But if it's one thing, that's going to be easy, especially if that garnishment is about to expire. Now, let's go a little bit further in dealing with that. Now, say, for example, that happened now, but you're not buying a home until January or February. They're going to pull your credit report in January or February when you come to them. Then those are the pay stubs you're going to provide them with. There are no garnishments that are going to reflect on that pay stub, right? You follow what I'm saying? So it's going to depend on where you are in the process. That's why it's very important that you're connecting with a lender that has a seasoned loan officer that can help you navigate. Because, see, there's very few people that will have perfect credit. when they go into a transaction. So that's why I tell people, don't be afraid. It's important to meet with the lender early on so they can tell you where you are in the process and tell you what their concerns are. They'll even tell you the exact month that you can purchase on your according to your credit report. So thank you very much for asking that. Are there any other questions before I go to the next part? Okay, so now we've gone through the W-2s and tax returns. We're looking at the pay stubs, and let's say that Ms. Booker doesn't have any negative deductions. So now they're going to be looking for positive deductions. Do you know what a positive deduction is?
I'd assume it's other sources of income outside of your check stubs or your source of employment. So it could be you receiving child support, stuff like that, right?
Oh, you are thinking good. It's additional income that may be shown on your pay stub from that employer, right? So what do you mean by that, Miss Booker? Say Miss Booker works for a firm that's a marketing firm, and say they give bonuses. That's additional income. And that bonus will show up on that pay stub, right? And lenders love to see that you got additional income other than that $15 or $15 or $20 an hour that you're paying. Because keep in mind, you didn't share with them that bonus. You just told them how much you made an hour and how many hours you work a week, right? So now they're like, oh my goodness, Miss Booker looked better than what I thought. She gets a bonus once a year for $3,000. That's income that they can use towards making you look like a stronger candidate. And then guess what? Miss Booker didn't share with me that she get paid for overtime. Overtime is also looks like a positive deduction. That means there's extra money coming in that you didn't include when you were doing your application. Another thing they like to see is they like to see that you're raining or that you are saving for a rainy day, that you're not spending every penny that you have coming in. So like they like to see that number one, you have money going directly into a savings. They don't care if it's just $5 or $10. What they care about is that you have established a pattern of savings. So they know that if you ever get in trouble, can't pay, you can always go to your savings account and be able to pull something out of that to assist you with paying that mortgage. They love, love, love when they see that you have a 401k. Again, that's another avenue for being able to pull money from in the event that you can't pay your mortgage and be able to continue paying your mortgage. So again, they're looking for positive or negative deductions. Okay? The next thing they're going to do is they're going to put your pay stub right beside your application. They want to make sure everything matches, but guess what? They're not going to chance it just from looking at that pay stub. Why? Because technology is so advanced, more computing, that you can make your own pay stubs these days, right? So what they're going to do is send what is called a VOE out to your employer. That's verification of employment. And they're sending that out so that the lender will be able to see that you are employed at the place that you said you are employed in, that you are in the position you say you're in, that your income is what you say it is, and when you allowed them to start taking money out of your savings for your 401k. And they also want to ask the lender, the employer, what's your likelihood of still being there? Are they on probation? Right? They want to know that because they don't want to give a $300,000 loan to someone that's on probation and getting ready to be fired. Right? So then when they get that verification of employment back, The underwriter is going to do some number crunching to make sure that you can afford this home that they are currently trying to put you in and get you approved for. Okay? So now we've looked at our W-2s. We've looked at our tax returns. We've looked at our pay stub. Let's look at that bank statement. Okay? So the very first thing that they're going to look for on that bank statement is to make sure it's in your name, because somebody will turn in their mother's bank statement, or a cousin's, or their dad's, the grandma. No, is your name on that bank statement? Because if your name is not on it, I don't care if you deposit money in there all day long. If your name is not on it, they're not going to look at that as your savings account statement. Okay? So they're going to look and see if your name and if it matches the address that you're currently living in. The very first next thing they're going to do is they're checking to see this company that you work for, does your money automatically go into this checking account? Because guess what? Miss Booker, you told us you made $2,000 a month. But when we look at your pay stub, when we look at your bank statement, we're seeing only $1,500 deposited into your bank statement every month. Where's that other $500 you told us about, right? So they're going to be looking at those types of things. The next thing they're going to look at on your bank statement is, they're like, okay, we see these 5 credit cards that Miss Booker got. We see there's a payment coming out for each one of those. So that means she is the one that's paying them, and she is paying them on time. Okay? The next thing that they're going to look for is NSFs, which is non-sufficient funds. They want to know that you know how much money you have coming in, and they want to know know how much money is going out. They want to know that you're not overspending, that you are on a budget and you are keeping that budget and you're managing it well, right? They want to know those things, okay? The very next thing they're going to do is they're going to say, okay, she's good there. So let's see what's the next thing we're going to look at, okay? They looked at your account and they see that you have a balance of $2 in your account. Now, I'm going to ask you, what do you think the lender is thinking if they see the balance in your savings is $1 and the balance on your checking is $2? Somebody, anybody.
You spent all the money.
That is correct. You've spent everything. And I like to share this. You have to anticipate that there are some charges that you are going to be responsible for when you get ready to purchase a home, right? And we want to make sure that you at least have that amount of money. So that's why it's good that you meet with a lender, so the lender can not only tell you that you're good with your credit score, you're good with your credit history, you're good with your documents, how much you can afford, but they can also tell you what amount of money that you're going to need in order to start this transaction. Okay? Now, I want each of you to write the word money down. Write the word money down. There are 5 things I want you to write down that we're going to be looking at. And I may not be able to finish this on today, but maybe on another given time, I'll be able to send the information or something of that nature. So the money, number 1, you're going to need earnest money. EARNEST, money, earnest money. Number 2, you're going to need money for inspection fee. Number 3, you're going to need money for an appraisal fee. Number 4, down payment money. Number 5, closing cost money. Those are the things that I prepare, or any homebuyer counselor or any lender will prepare you for. Now, let me say this. If you have a great credit score, I'm not concerned with the down payment and closing costs as much because we can typically get you some money if you have decent credit, right? So I just want to talk about the first three. The first one being earnest money. Earnest money is good faith money. That is money to show the seller that you are serious about purchasing a home. So if you don't have any money to put down in earnest money, sometimes sellers will not think you're serious about purchasing a home. Okay. And so, say, for example, let's say you go out looking and searching for a home. I want to let you know if you go out there looking for a home, you're not the only one that's going to like that home. There may be 10 people that like the exact same home that you like, right? So when you go out there to look at a home and you submit an offer, there may be 10 offers submitted at the same time that you submit yours. So typically, what that seller will say, which one of those do not have any earnest money or don't want to put up any earnest money? And the realtor may say, we have five. Then he'll say, push those off the table. They ain't serious yet. I want to talk to these other five that will put up some earnest money. And you may want to say, what is earnest money? Again, it shows the seller that you're serious about purchasing a home. Okay. Earnest money is negotiable, right? It's negotiable between you and the seller. Sometimes the seller, however, will set an amount that they want for earnest money, but sometimes they will negotiate with you. So I've had people as low as $100. Or in special areas like Clarksville, I've had people to put $0 in earnest money and be able to get the home, right? I've had people just say, I want $3,000 and I won't budge. And so he'll look at all of them and they'll say, which one of those do I net the most money off of? And they may say, this one right here, Miss Booker. He said, okay, throw all the rest of them off the table. I'll take hers, right? Because he's interested in which one can close the soonest, which one is already approved. I know they got a good credit score and all this other stuff. Which one is already approved? And which one is willing to put that earnest money up? So they're looking at that. Okay. So oftentimes they want to know that when it comes to their earnest money. But let me also tell you something. Earnest money is not money that you will lose. You get credit back for that at closing. So maybe at a later date, I can talk to you about that part because it's a long presentation that I go into for that. Secondly, let's talk about inspection fee. Typically, that's money that you pay. Now, let me back up again. Let me go back to that earnest money. As I shared with you, that's money you get credit back for at closing. Now, some people will ask me, can I lose that money? Yes, you can. Because a contract is a legal binding agreement. It's an agreement that the buyer and the seller has to abide by in order to get that home, right? And either one that does not abide by that contract can be sued. So if you have a good realtor and a good loan officer, they're going to make sure you're never in that position. Now, let me show you a way that you can get sued or lose your earnest money. Say, for example, that he accepted Miss Booker's offer, and Miss Booker decided the next day that she wanted to go and look at the neighborhood again. But to my surprise, I saw another home that I like better than the one I put the contract on. So I went to the seller and I said, I like your home, but I want to get out of it because this one right here fits the needs of my family more. And it's up to the seller to say he'll let you out of it, but he'll say, but I'm keeping your earnest money. And that's legal. I like people to know that. That's legal because he just accepted your offer over all the other people and knocked them off the table. And now he's got to put his home back on the market and try to negotiate again. I got a secret on that too. He's already kept some of those as backup in case something happens. But you don't know that part. So let's go on a little bit further, okay? So anyway, if you back out of it, he can keep your earnest money, and that's legitimate. Now let's jump over to inspection. I always tell people there's two areas that I never skimp on when it comes to purchasing a home, and that is an inspection fee and insurance. Those are the two things I just don't skimp on. But let's talk about that inspection fee. I tell people inspection is for your peace of mind. It tells you everything that's right with the home or everything that could be wrong with the home, right? It could tell you things that's going to cost you money once you move into the home, right? So, say for example, you elect not to get a home inspection. So when you close on the dot and sign on the dotted line in that closing attorney's office, you just inherited everything that's right or wrong with that home. And it's going to be up to you to pay for it because you didn't get an inspection. An inspection is not required, but it's recommended. And on every client that I'd like to talk with, I love to tell them, please get a home inspection, right? Let me give you one example here. So we had a client that elected not to get a home inspection, but she said, my boyfriend is just going to look in it and we're going to go through it. So her boyfriend went through it, but guess what? Her boyfriend is not an inspector. They were just wowed at, oh, I get a 3-bedroom house and it has 2.5 baths and it has a deck, and I'm excited about those things, right? But guess what? There's so many things that are not visible to the eye that could be causing problems, right? So you're looking at those things, but you don't know that the roof has a leak. You don't know that the roof only has a half a year lifespan left on it. You don't notice there's a crack in the foundation, so there may be an engineer that needs to come out and look at that. You don't realize there's a river running under your house, so there may be some not just foundational but plumbing issues, right? You didn't get an inspection, so you don't know there's an electrical problem. But let me go back to my story. So she didn't get a home inspection. She moved into the home, and this is a home that had been in distress. It had been occupied by a person that was forced to leave because their home was being foreclosed on. Okay. So when she got in there, she moved in, she noticed her downstairs bath toilet didn't work. And so she called them and said, they need to come fix this toilet because it doesn't work. They're like, ma'am, the loan has closed and it's been over a week. No, that's your responsibility. You signed on the dotted line. You waived your right for an inspection. So she called someone out to take a look at it. What had happened was, you've heard that saying, the person who had the home previously had poured cement in the tank because they were upset about having to move. Had she got a home inspection, that would have came up in the home inspection. Because see, a home inspector, he's going to come in, he's going to run that dishwasher from beginning to end. He's going to turn the water on in the shower and let it run the whole time that the inspection is going on. He's going to go up on that roof. He's going to go up under that house. He's going to look at all the things that you typically would not look at to determine all the things that's right or wrong with this home and send you a report. When you get that report, you're able to use that as a negotiating tool for them to fix what is wrong on that home or to allocate funds for it to be corrected or fixed. So by waiving your right, now you're responsible for all issues that comes up on that home. So I tell people that $200, that $300, that $400 that you pay for an inspection is worth every penny. Okay.
Absolutely. And thank you so much, Lisa. I know we're kind of going over a little bit. We got one more little piece that we got to squeeze in here.
Well, I'm going to stop right here then. Okay. Thank you for allowing me the opportunity to present. Call on me anytime. You all have a great rest of the day.
And thank you so much for this plethora of knowledge. You have really given us a lot of information, Lisa. Thank you so much. And I do thank you for chiming in here kind of a little bit at the last moment here.
No problem. I appreciate the opportunity to share, and you all have a great rest of the day.
Oh, Christian got one more question. Hold on.
Oh,
Did,
okay.
did they ever get the toilet fixed?
Yes, they did, but they had to pay for it. All right. Thank you. All have a great rest of the day.
Okay.
Thank
Bye.
you.
Thank you.
Bye-bye.
All right, ladies, we are into the last portion of the first time home buyers course and financial literacy. And as my two guest presenters have stated, yes, it is a very important thing for you to get your credit in order to possibly get a home mortgage. But once you go through and you get that together, as Ms. Booker stated, there's so many things that you have to follow through. But last but not least, in order for you to get a home, unless you're buying a home cash, you will have to get a realtor. Okay. And that's someone who knows the legal process of buying and selling a home. Okay. I have had a ton of individuals to say, hey, you know what? I can purchase this home on my own. And they went through the process. And guess what? There were so many documents that they didn't know and were left out of that they ended up spending twice the amount of money that they really needed in order to purchase this home. Okay. So that's one of the important reasons of definitely getting a realtor. And I'm going to share something with you. And I promise I'm not going to keep you too much longer because I know we've kind of been on here quite a bit. So I'm going to definitely go over some important things as it relates to the Nashville housing market. Once you get a realtor, your realtor can basically tell you what is going on with that market. Or if you're trying to list your home, that realtor can tell you the best way in order for you to sell your home. Okay. Can you all see the screen real good where it says Nashville housing market overview? All right. Well, if you're looking for a home to purchase a home, you've gotten your credit together, you've gotten pre-approved with a mortgage lender like someone like Ms. Booker or any other bank. And I say it's often good for you to go through your bank that you bank with, that you have a checking account or some type of credit union account with. But here in the Nashville area, the overall median home price, as you all know, has risen. As of August of 2025, the average home cost here is $448,300. Now, 10, 15 years ago, this same housing cost you probably could get for about half of that, if not a little less than that. But because of the growth of Nashville, it has pushed not only the rental market up, but the housing market up. Okay. I'm going to talk a little bit about some market trends, the steady growth, some competitive market conditions, and also neighborhoods to watch. If you're looking to purchase a home, some of the most, I guess, sought out neighborhoods would be like the East Nashville area, the Nations, Germantown, Donaldson area, Ashland City, White Bluff, and Laverne, Tennessee. Those are some growing areas that you can purchase your home in. To look at the Tennessee housing market as an overall view, for as of October 31st of 2025, there were 38,082 homes that were listed to be sold. Okay. In October, 867 homes actually came on the market. As of August, depending on the area, the median price here states that it was 330,000. But the median price of a home here in Nashville is over 400,000. Okay. Percent of sales over list price was 14.8%. What that means is how many houses were listed, but then they got more money than what was listed or asked for. 14% of those houses got more than what they actually asked for. What was the percentage of sales that were underpriced or bought under the list price? More than half, 64% of houses, let's say if a home was listed for 450,000, someone purchased it for less than that, maybe 425 or 440. But 64% of those houses. So what this is saying is that a lot of the houses now that are being listed at a certain price, you can actually get it for much cheaper. Okay. I'm not going to sit there and say, hey, always go in under the list price, but the majority of times you can get a home a little bit less than what the seller is asking for. Understanding the home buying process. Again, you want to make sure you know what your credit score is, okay? Review your financial health and your credit score. Determine your budget and if you can afford that home. And last but not least, get a pre-approved for a mortgage. A lot of times when you're working with a realtor, they're going to want you to be pre-approved, okay? Even before they show you a home nowadays because of the NAR settlement. Find a good real estate agent, someone that's very local, that has that expertise and can guide you through the market. If you're
And gonna
looking,
be truthful with you.
I'm sorry, what was that?
And gonna be truthful with you.
And that's right. You find you a real estate agent that's going to be honest with you, that's going to be truthful to you, and that's really going to have your back. Somebody that's going to work for you. Okay.
That's right.
If you get with a agent and all they're talking about is, showing you big fancy houses out way beyond what you're looking for, they're out for money. Okay. You want somebody that's going to help assist you find the house that you want to be in and that you can afford. Okay. Also, a real estate agent helps you with the whole house hunting process where you can identify the neighborhoods. They help to identify neighborhoods and the properties, again, that fit your needs. Also, a realtor is going to make an offer and help you close the deal. They're going to negotiate the terms and they're going to make sure that you complete the necessary steps like those inspections, following through with your lenders to make sure that it appraises accordingly or it gets appraised, okay? And after going through inspection, your realtor is actually going to sit there and talk with you to say, hey, this needs to be fixed, that needs to be fixed before I even begin to want to even purchase this home. You can put a contract on a home and you can make it contingent upon the inspection. So if things don't go right with that inspection, you have the ability to back out. Okay.
Yep. It's true.
What to look for in a realtor? Again, you want to find somebody again that has your best interest, that has your back, that's putting your family's needs first. But you want to make sure they're currently licensed. You want to make sure they are experienced in listing and or buying homes, condos, or whatever it is that you're trying to purchase. You want to make sure that they can work well with others. There's nothing like getting a bad realtor and they're constantly bickering back and forth with other realtors. A bad realtor can make a good deal go sour quickly. Okay. You want to make sure they got great communication. And again, you always want to make sure that this realtor has you and your family's best interest in mind. Okay. Otherwise, it could be a really bad experience. And I'm not going to hold you too long. I am a realtor as well as the CEO of MoreComputing. So I've been in real estate for over 26 years. And trust me, I got every scenario under the sun. But I'm not going to stay on here and keep you long. Do you all have any questions over anything that we talked about in this first time home buyer and financial literacy seminar? Because we've talked about budgeting tips, we've talked about credit score requirements, Lisa talked about mortgage and all that other good stuff. Do you all have any questions so far?
No, I just enjoyed it because I was a first home buyer too, so I knew what y'all was talking about.
Okay, okay.
Yeah.
Good deal, good deal, good deal. Well, I hope this has been beneficial to you all because at MoreComputing, we definitely want you to get the technology skills, but we also want you to be educated, okay, in terms of financial literacy and even in the home buyer process. Whether you're a first-time home buyer, a second-time home buyer, that's what we do. We just want to make sure that you all are educated and well-rounded with knowledge. So we'll be putting on some more seminars, not only just the first-time home buyers, but that, we work with children. We do back to school bashes. We do Tech Goes Home. And I know a couple of you all have expressed some interest in that we'll be doing that the first week of December. Okay. So if you all don't have any more questions at this time, this will conclude our session. I thank you all for joining in with us and sticking around as long as you have today. So without further ado, if there's no more questions, we'll end the session. Hey guys, thank you so much for attending our financial literacy and first-time home buyer seminar. We do plenty of seminars throughout the year, so we hope that you'll stay connected with us either on our social media page or on our website. Definitely to be on the lookout for more of our computer skills training courses. So again, thank you all for sticking with us, and please visit our site so that you can get more information on our digital literacy skills courses, whether you're wanting to learn basic computer skills, or if you're looking to get those certifications from CompTIA, such as the Cert Master Tech Plus, or even the A Plus, Network Plus, or Security Plus. So guys, take care, and thanks again for joining in.